yes, Doge has a larger market capitalization than the company Ford and also Kraft Heinz, but maybe not anymore. So the big question, and I want to ask, I guess, Joseph, do you buy the dip?
No, definitely not.
Not yet?
I mean, it's the hype has made it jump, and now it's the market correction is well underway, and I still think it's got a way to drop before you start buying it.
Way to drop. Okay. So I'm just looking here at some of the cryptocurrency market caps. I'm seeing, Doge is here 7th. Of course, we wanted to talk about our top 3 picks. So what would you be looking at when it's time to start buying the dip and adding positions again?
First off, I'd start looking at Cardano. Cardano's actually had a pretty good jump over the past year, and it's mostly because people are losing faith in Vitalik Buterin's promises when it comes to Ethereum, and I think it's actually a very good position to take, even if Ethereum 2.0 does take off. Because if hydrosharding takes off, it's actually not hydrosharding. If Ethereum manages to successfully shard its own blockchain, it will be competitive. If Cardano successfully manages to shard its own blockchain, it will be competitive with Ethereum even still.
So you're looking at Cardano as a potential Ethereum killer. And we talked about this, I think, in a previous show. I was buying Ethereum mostly, and we've talked about this, like I said, more people have been buying it maybe for NFTs, maybe for DeFi and Uniswap, because you need, Ethereum to buy that stuff. But the big surprise for me was the fees. And it goes back to, Ethereum 2.0, which is supposed to address those fees. But my fee, or a gaslight fee, for my transaction was 30% of the entire transaction. And for Cardano can beat that if it can come up with, I guess, a cheaper fee structure, that would be better. But again, can it actually have all those projects behind it as well? Can it create that ecosystem?
Well, right now it's still in the development phase. I mean, the next development phase should be the one where it scales. And if it does manage to scale, then it scales even to appropriate levels, the same as Ethereum or better, then we will definitely see a large movement. I mean, right now, you just mentioned the price of gas.
Can I mention something very quickly? And it's only because we just got a comment in regards to how these people, what this person feels about cryptocurrency. He figures cryptocurrency, this would be David, will all go down, and that fiat currency digitizing will beat crypto. I think I agree.
Yeah, the digital currency is coming for sure. Yeah, China has theirs.
Well, no, absolutely. But I think crypto will fail because it's not supported. And basically, by the end of it, we have to have a trusted third party, right? And so far, it's proven, especially with that news from Turkey, the guy pissing off with $2 billion of your money. That's not a trusted third party.
But
I would say,
go ahead.
I would say that there's always going to be a contingent of people who will not trust a third party, to the point where decentralization will continue to always be a thing.
Yep.
Therefore, we will always have decentralized cryptocurrency now.
And again, that returns again, right, to the principal ethos of cryptos. And we've mentioned how the new money, new traders, or the Joe Schmo, Jane Doe probably don't really care about that, but it was all about decentralization, right? The way that this gets avoided is when regulations come in, right?
But isn't that defeating the decentralization?
Well, sorry, there's going to be depositor insurance, right? So now if you...
Then how do you guarantee that the depositor's insurance has to be done by a trusted third party? Again, decentralization doesn't work.
Well,
we're talking about what you're talking about when you talk about depositors insurance is the offtake and intake of cryptocurrency. What we're necessarily talking about with decentralization is the way in which the blockchains are run. Now, the exchanges themselves can be perfectly centralized. One exchange can disappear tomorrow and nobody will care, but the blockchain will still be there.
Well, I mean, people that are on that exchange will care. I thought you
Yes,
lost
they-
everything if that exchange goes down, right? That's the thing about
Well,
the crypto is it's supposed to be immutable, as it were. And so if an exchange goes down, there goes your cash.
that's the risk you take whenever you buy and keep your cash on an exchange, and it's why I always say take your money from the exchange, put it away safely in your house, somewhere where you can access it, and get it off the exchange as soon as possible. Because of course there are two types of exchanges: those that have been hacked and those that will be hacked.
I like that.
Now, you have to be on the exchange to do the exchange, so you literally, like, you're always taking a chance, correct?
You get on there, you pull the money off,
Yep.
you put it into a hot wallet, put it in a cold wallet, paper wallet, anything of that variety, get it off the exchange.
Yep.
You can trade that with any exchange on the planet.
Exactly.
You can go to a decentralized exchange and still make.
Oh, no, I'm just saying that while you're on the exchange, you are open and susceptible to being hacked, for lack of a better description, correct?
Yeah, but I mean,
I just wanted to make sure. That's all. That's all. I know
Sure,
you're
but
pulling
there's
it off
another-
afterwards, but the actual transaction, the transaction itself, is still open
course.
to, for instance, the Turkish CEO running off with $2 billion of your money, right?
Sure, that's why you get in and get out within like an hour and a half.
Yeah.
It's like, I mean, every time you go into a bank, there's always a probability that you can get robbed when you're there.
Yeah, your bank money's not safe too, right? By the way, and that's what I mean by depositor insurance, right? Banks are you can save up to 200K if a bank go bust, right? So if those type of depositor insurance comes, a lot of the exchanges that might not have the money, yes, they'll go away, but that's the whole point of depositor insurance, right? Is right now we have it for banks. So if your bank does shut down, you're guaranteed $200,000 from basically the government, right? The treasury. Same thing can happen for cryptos, and what I mentioned is that's the big idea, right? That's why I think as a fund, as an institution, you're going to be looking at coin or whatever rather than the actual token, because some of these exchanges, well, they have no depositor insurance, right? So yes, that's the risk you're taking, right? You wouldn't tell the members of your fund to say, yeah, by the way, we're buying this token, and there's a chance that we might lose it all because this exchange goes bust, because there's no depositor insurance, right? So the regulations will address that, but as we talked about in the past, and as Joseph mentioned, the whole aspect of cryptos being a way out of fiat, right? Away hiding from governments, big institutions, big banks. That's all going to disappear, and hence why I am now watching and more interested in the DeFi networks, because that's sort of becoming what crypto was supposed to be, and it's hanging on to the original ethos of it. So I think that's a really exciting one to watch.
Same poop, different bag? I don't know.
No, because
that's all. Is it the same though? Just dressed up differently?
Well, you can do more with it. It's the same ethos, but you can do more with DeFi than you could with traditional crypto.
So basically, then the what we're looking for then in the end is functionality. Is that correct?
Yeah, I mean the use value for cryptocurrency or the crypto assets in general is expanding considerably as the technology advances and the technology surrounding it, the ancillary technologies. Like, it's not just, I don't know, you buy funny money on the internet and it goes up or down. And so you buy funny money on the internet and you can actually put it into like a slush fund, or you can put it into like you can use it to invest in someone else's decentralized company.
So Cardano then, and what, Ethereum is this one of the ones that you're thinking about, or are there others?
Top three picks.
Top three. Right? So Cardano's one. Should we quickly look at Stellar?
Cardano was one. Yeah, go ahead and talk about Stellar.
I'll quickly look at Stellar. This one might be a bit controversial because it's the same team that broke off from XRP. By the way, XRP, which is Ripple, people say that is essentially the banker's coin, right? So it's sort of what a lot of people who say crypto is going to fail, they're really big fans of XRP because that is a centralized bank institution token, right? What Stellar is again, same team, same sort of aspect about cross-country transactions and currency transactions, essentially. But it is, as you can see here, a decentralized protocol for digital currency to fiat money transfers, which allows cross-border transaction between any pair of currencies. And when I was looking at this project way back in the day, Lumen is a token that they use, but essentially it would be the in between from transacting, say, Canadian dollars into pesos, and it could happen basically instantly, right? If you want to send a money transfer now, and you don't have to wait 2 days at MoneyGram or whatever, you could do it really instantly. And the whole idea of XRP is that as well, right? Where these banks will have that as their standard token, and when you're transacting with money or shifting money, the bank will buy Ripple, use Ripple, and then the other bank will take the Ripple and then transact it back to another currency, which of course means that Ripple will have to be stable, like at $1 or $2, or I don't know what that number is going to be. But that's sort of the aspect here. And you can read here about Stellar. I'm a big fan of this, and they give like an example here on how to buy. Which, I mean, you can buy it anywhere really now. I think even some of these Canadian exchanges do it. You can read about its transactions. I just want to give you an example because I was reading this a bit earlier here. Let's see here. Where is they give something about digital dollar token. So that's what you can do, right? With Stellar Lumen, you can make it into a dollar token or any other token here, right? Issuing electronic credits for dollars is basically what any local American bank does thousands of times a day. But in a global system, this one-to-one promise of a token for a currency has important implications. For instance, no matter how a token moves through the economy, the underlying dollars never leave that bank account in the US. So suppose someone loans their tokens to someone else who then uses them to buy a car. No bank has to settle the purchase or approve the loan. And furthermore, it doesn't matter if the seller of the car lives in Mexico or Singapore or anywhere they can still own the tokens and can trade them however they please. The Stellar network makes money borderless. And they talk here about a Venezuelan holding his net worth in dollars. And again, that Lumen dollars, where a Filipino expat can send dollars back home and the recipient can hold them safely digitally until they're ready to exchange the dollars to Filipino. I think it's Vietnam's dong. I don't know what the Filipino currency is here off by heart. American company can pay a Mexican vendor in dollars, and the vendor can pay its suppliers in turn. So as I said, it's still using fiat, right? So you take the fiat, but the fiat is essentially tokenized, and then anyone can use it. The key is it has to be stable. And, I think this is sort of what people mention, sort of similar, I guess, Joseph, right, to XRP. But XRP, of course, is the banker's coin. And XRP does have partnerships with
Peso.
pretty much every major bank in the world.
Sorry, it's peso, Filipino peso. Sorry, you got me interested. I had to look it up.
Yeah, I know. I almost did too. I don't know. Stellar Lumen's always been tainted by association with XRP, and I really don't like Ripple.
Yeah,
like I understand it's kind of a one-trick pony coin too. It's like it's got its job is primarily remittances. I mean, isn't there really much of anything else you can do with it?
So I mean, like the team, they proposed this was years ago that there would be this large crypto fiat exchange where Stellar would be that for better or worse the world token, right? The world crypto token.
About every coin.
Yeah, XRP says the same thing, but it would be a marketplace where you'd have the dollar, the loonie, the peso, all these fiat currencies, and Stellar would be able to you'd be able to use your lumens as digital tokens to exchange in any of those currencies instantly. And I think they did open the site. I'm not sure what happened to that. I guess the project didn't take to. Is it Meridian? I can't remember what it was called, but yeah, I mean that's probably what is coming. It looks like this is now coming on November 16th to 20th. The global financial infrastructure. So I think it's a cheap coin too at 40 cents, 35 cents. The chart, I'm a big chart guy. The chart looks really good. I think some of us over on our Discord chat took the trade at 12 cents on that breakout when I mentioned it, even on a Market Moment article. And yeah, now we're finding support here at 35. But I think XLM is definitely one to look for if you're into the whole, fiat and tokenization of fiat.
Now, I'm going to ask TK a question here. TK,
Yes, sir.
with the idea that we're now investing these things in these assets, when they become currency, will all this investment that has led up to them becoming currency become null and void because they'll be appropriated by whatever official power or agency to become a currency? And beyond currency, you know what I mean, investment, there's no retail investment. Do you see what I'm saying? I guess I don't know. Am I just talking in circles? Yeah. I could be. Just explain. Let me in on this.
I actually compiled a little something for a question like that.
Awesome.
I'm obviously a fortune teller.
Can you guys open
it? Thank you, TK.
So I don't want to bore people with it, but I thought it was pretty interesting, and it would kind of highlight something that as an individual you sometimes forget, and as a group we sometimes overestimate. Finance is interesting in that way. Mm-hmm. But basically the argument here for from now on digital assets, NFTs, you have it. It's a whole mania of itself. It's a whole technological innovation that's coming, that's trying to change how we do things as a society. And a few people have analyzed deep markets and kind of looked at it and seen that over time, crypto's technology exhibits the same sort of development stage until it is finally in a mature place. So not to go into too much of the old examples, but you go back to the 1600s, we had tulip mania. That was more of a demand supply thing, and people were using it for, whatever the cause was there. We had the canal mania. This is basically the first stock to ever IPO. People were underwriting for ships, and they were taking risky bets with those ships, but people over speculating with that new technology. And the same kind of mania happened where people bought in, they overestimated what the potential could be, and they sold out. Railways, same thing. The steam railways, they came in, the new technology was there. It was the Industrial Revolution. So people were coming in with new manufacturing and wanting to transport it around the world. And around the time, certain companies that were doing it, well, are the ones who survived, but people who came in through the mania were not as common anymore. The more, common ones are the internet mania. So 2000 and the dot-com bubble. And I changed the wording for this one. We'll call it the affordable housing mania in 2000.
I like that. That's a great label. I love it.
Yeah, and most people feel like it started in 2006 to 2008. Mm-hmm. But if you look at the data, it started from 1980. I forgot the president's name, but he initiated. I think it was Ray. Yeah, one of those guys.
But Reaganomics, man, trickle down.
He really wanted Americans the American dream, white picket fence, and everybody to have an affordable home. So he made it a little easier. But all these kind of have the same cyclical pattern. And I don't know if it's him who said it, but history repeats itself, but it doesn't rhyme. And a bunch of people have studied those cycles and kind of noticed the same common trends in the underlying economy that translates into the financial assets. So most technology goes to an interruption phase. So this is when people start noticing that this new technology is trying to come in to change how we live, to change how society is currently, because it's not as productive in the innovator's eyes.
Right.
And this new technology interests people, and we go into the frenzy phase. That's when people are buying in and speculating on the future of this technology. So take railways, for example. People thought we're going to connect railway. I don't know why I use railways. I'm not an ancient dude. Let me use the internet bubble. Jeff Bezos has a famous line where he said, before I started, I was about to say Apple, before I started Amazon,
Same thing.
To me, they're kind of the same,
Yeah.
the same thing. Before he started Amazon, he saw a stat on a memo. So this was way back in the olden days, on a memo, and it said the internet has grown by 200% in the last 2 years, and that's where he's like, oh, this is the next thing that's going to pop up. This is going to change how society does things, and he was wanting to sell books. Behold, now he's selling everything. It just things happen, but at the time he was not the only one who was seeing that trend, and there was a bunch of .coms that came in, and some of them were useful and some of them were not. But it wasn't the innovators' fault. It was more of the frenzy behind investors, institutional and retail, trying to bank in on that because they had missed the previous wave. Mm-hmm. And the same pattern just persists on into even today, where the big question now is digital assets going to be the next big thing? Mm-hmm. And most people would ask themselves, oh, okay, is it the central banks who are controlling the cycles, or what's actually pushing people along? And I feel like the biggest factor is actually the people and society.
Yeah,
I know I'm about to sound like
I love your presentations. I'm sorry, I'm just distracting. I'll let you keep talking, but I'm just looking at the stuff you presented here, and it's pretty cool, dude. Anyway, keep going. Sorry, I didn't mean to interrupt. No. I was just, fawning on you. Sorry. Oh, okay, here we go.
No, that's okay. Yeah, I'm terrible at this. I was like, let me give it a try.
It's great, dude.
As well.
Very good. Yeah, anyway, go ahead.
We have a cyclical pattern that a lot of people have kind of noticed, but they focus on the production capital, so the people, the labor, etc., or the financial capital. But we never really focus on human capital, the actual society, the people. Mm-hmm. So we'll take the crypto market, for example, and place the same stages, but now we put the people instead of the actual asset itself. Mm-hmm. It started off with the change, the deep crypto cohort, the people who really, the decentralized people, Vishal and them, who want to take away money from the central bank. And that's the main ethos of cryptos. Those people are still probably holding from when it was below $900. And then there are people who missed the tech bubble and they are chasing yield now. And generally, some of these guys are also institutional guys, so they're investing for their own portfolios, but they remember the last bubble and they want to speculate on this bubble. And then comes TK and my mom and my cousin and my annoying neighbor who vacuumed we start buying into it, and beholden, the smart money, aptly named, by the way, the smart money, also catches on to this trend. Then corporations, and then this is where it gets tricky for a lot of the technology, is government and regulators. And that's the maturity phase. Mm-hmm. So I know now speculating on where Bitcoin is anybody's bet. My guess is good as anyone's. Mm-hmm. But from what most headlines are saying now, it seems Bitcoin is transitioning from the frenzy phase, where people are speculating on it, to more of this regulatory place where people are like, okay, it's a great innovation, but let's see how we can regulate it so people don't lose too much from it, or people don't do it.
Quickly, TK, if you could address this as well, I apologize. It's just another comment by one of our viewers, David again, saying he has a major issue with drawing key levels because he ends up with too many, and when it gets there and I make a decision, it doesn't work. So it's not following classical lines of investment, correct?
Yeah, it's had two frenzies and it tapered down for a bit, and now it's kind of back, and it's taken away from that and gone into two different pockets as well. Mm-hmm. But it's it's not the asset that's important, which is a weird thing to say. It's how people are accepting it today. That's what's more important. People could be, whatever the institutions or corporations, the government, but it's that acceptance of it, which will lead to the form that is more productive. So not just the financial needs of it, but actually creates productivity. Because in the greater good for the economy, productivity is the better thing. Financial capital will always be there. We're going to print money until kingdom comes. But it's like putting that money into productive assets is more important than what financial assets actually go through. So, for example, the mortgage-backed securities, they were terrible for 2008, but now a system like that is actually what creates the 30-year fixed mortgage in the United States. One of the only more stable 30-year fixed mortgages that allows people to have this affordable housing. Obviously, there are questions about bubbles in certain places, but that's a whole topic for another thing. But yeah, it's those kind of systems where you focus on productivity and not the financial asset that allow it to be welcomed by society. So I feel like, personally, I'll be completely biased here. Bitcoin is nearing the end of its frenzy, and more people now are talking about regulation because it's just a rite passage. It's okay, this thing is now $1 trillion. Okay, we need to take it a little more seriously. And the only way to do that is by regulating it. So are we going to tax this thing as, an asset? Are we going to tax it as a collectible? Are we going to tax it as income? Those questions are popping up. And it doesn't make it easier when your president is now taxing capital gains at 40%, or potentially taxing capital gains at 40%. So it's like these questions are now coming up because they've kind of realized that there's a lot of money in the system, and they've printed and released a lot of debt, and they need to reduce some of that by taking in some tax revenue.
Now,
and
is there
that
also a strategy to get people to pull money out of the market and put it into the economy?
It's the only way they could. Sadly, the government only has one tool. The other one is giving away free money, but that it doesn't seem to be working the way they wanted to. So that's why I feel like, although Bitcoin has kind of had this popularity, it's the whole ethos of the digital assets that should be focused on. That okay, now people are selling NFTs and they're selling art, digital gifts and stuff like that for millions of dollars. How can we? I know people don't like regulation, but a credible third party is needed a lot of time to stabilize a market.
Right.
Not just for that, but also to ensure that there's no more grift that goes on in the NFT market.
Sorry, what's that?
So, go ahead.
Also to make sure there's no more grift that goes on in the NFT market. I mean, a lot of times when the things are popping up where you buy a thing, it is just a link to a thing which is not even on the blockchain. So it's taken away, and you don't have anything. You spent like hundreds, if not thousands of dollars on a link to a 404. Congratulations.
Ouch.
Wow. Imagine. Imagine. And that's because a lot of people missed 208, they missed the MBS period, they missed the Apples, the Amazons. That kind of gets in your psychology, especially if you feel the wealth gap is increasing. And a lot of people right now, you can notice, the wealth gap is big talk right now. And the Main Street is not having fun with that. Wall Street is not the biggest. It's not the funnest place to be. Well, you're making millions, but it's not the best. It's the most popular place to be right now because that conversation is back up. People are kind of realizing there's a disparity between wealth creation and wealth preserving. So that's why I feel like digital assets are a means to it, but the more productive version of it is still pretty far away from being accepted by society. Maybe by the financial field, it'll be here soon. But I think by society, it's still a long shot away. But yeah, hopefully that answers.
No, that was a great answer, dude. Very, very, very concise and well thought out. Thank you. And your presentation is absolutely wonderful. If I was a teacher, it would be an A+ in it for you. But I'm not a teacher, thankfully. Maddie,
thank you.
I want to throw this at you. With all this that you've just heard, what is the general tenor amongst the youth? And what is in regards to cryptocurrency? Are they looking at it as an asset? Are they looking at it as freedom from a financial system? Do they even consider that? Like, what is crypto and what is NFT to people that you know?
I mean, aside from NFT art, which I know does a lot of great things for the artists in terms of just being able to like copyright certain things, which is great. But aside from that, I would trust a human more than any of this, or like a government more than any of this technology stuff. Is that kind of what it's comparing, right? It's the difference between like dealing with like a bank and something that feels more tangible, or just blockchain.
Totally.
Right?
Yep.
So I would trust people and humans more than the technology that the humans have created.
Interesting.
I think.
So there's
if it were me, but I don't know if that's necessarily the sentiment amongst many people. But I find still maybe naively more comfort in dealing with people and trust in people than technology.
And I think you're probably and not that I think that you're right. In a certain sense, I think it plays on a very human aspect of what our nature is, and that we're naturally reticent to give control to something that is automatic. Because we realize that the human experience is not black and white. There's a lot of grays involved, right? And technology has yet to encompass that with any kind of reliability. And so I think that generally, I know that even though I know that there's a lot of chicanery and the system is built to supply itself and all that stuff, like, that's another point of human nature, is monopolizing on a situation. But I think the trust factor, without any kind of person or, as you said, tangible thing, is probably pretty foreign to the human experience. And I don't know if we'll ever resolve ourselves to allowing that to take place. That's my question or statement. I don't know. That's me just talking now. Sorry.
No, it's an interesting, because people are trying to change, and you notice with to take it away from pointing at the cryptos for a bit, is even robo advisors and technologies like that. We're using AI, machine learning. I don't think they do deep learning, but using AI.
Big one.
Yeah, it's taking time for people to just allow robos to advise them on their financial dealings. And it's just, I don't know what it is. I think we've been fear-mongered to a point where we think technology is going to take over, and people have actually sunk into that narrative. And even the younger people don't want to take on some of the technology, and they use some of the older style stuff. But it just takes time for the technology.
Oh,
darn it.
Dropped.
No,
how you doing?
There we are. You're back. You're back, TK. Go ahead. Complete that thought, my friend.
Railways were ignored after the mania for a good 30 years until people realized, oh, snap, we need this for the economy. This is actually a good change. And that just takes different teaching and different time to actually adjust. So I feel like eventually people will accept some sort of digital asset, but the first form still seems to be in infancy of its of its actual potential. It's something I noticed Joseph talks about a lot, and he says he's frustrated at what the technology is being used for now.
Gotcha.
Well, on that note, what's our third pick? What's our third crypto pick?
The third pick was the Cosmo blockchain and its coin Atom. Now, there's it seems to be a bit of a theme when it comes to these three coins that we've chosen, is that they are usually runner-ups and replacements.
Mm-hmm.
Now, cycling back, we have XRM or Stellar Lumen, which is kind of a replacement. It performs the same function as XRP.
Mm-hmm.
We have Cardano, which performs the same function, potentially even better than Ethereum.
Okay.
And this one actually replaces a coin we haven't really talked about very much called Polkadot.
I've never even heard of it.
Polkadot is actually newer than this coin, so technically, I guess Polkadot's a replacement for this.
Okay.
But Polkadot has what it does is it provides interoperability bridges between blockchains.
Okay.
So basically, you'd be on Bitcoin and you would want to do business on Ethereum. So you would use you'd use Polkadot, and there's more technical language involved here that I won't get into, to basically build a bridge so you can spend your Bitcoin on Ethereum to use DeFi, basically, more or less.
Gotcha.
It's actually a lot more involved than that, but the point of
that's actually pretty involved.
Thanks for that explanation, Joseph. I appreciate it.
Let's just say it gets worse. Now, Cosmo provides the same function, but cheaper and more effectively. Okay, here's the 5 points. It has a lower price to entry.
Right.
It has better price movement, which means that it's been around longer. It's actually up, I think, about 850% over the year. Sorry, 698%.
Close enough. Holy crap.
Close enough. It works on both token, data, and assets, which means that you can trade either of these three things between the blockchains it supports.
Okay.
It has less hype than Polkadot, which means that there aren't going to be a lot of people who are artificially inflating the price.
Gotcha.
And it is also a proof of stake coin, which means that if you're on, say, Poloniex, you can buy a whole bunch for it. You can spend $200, get a whole bunch of these things, and you can sit on Poloniex, and it will build money for you depending on how much you have.
Explain that concept to me. How does that work?
Staking works more like interest in a way.
Okay.
Proof of stake is a consensus mechanism. It closes the block, basically.
Right.
Okay. It is the secondary form. It is the alternative to the computer-intensive proof of work.
Okay.
It's basically a whole bunch of people who already own it, and they all kind of form an agreement as to what the blockchain is between them. Okay. They form consensus between them. And the person who gets to close the block, for the most part, is usually the person who owns the most. So if you own $2,000 worth of Cosmo or Atom, and everyone else owns 150, then you're going to get to close the block the most. Now, there are usually protocols in place to ensure that it isn't one person closing the block at all times.
Okay. Yeah, I was beginning to wonder about that, because that seems kind of centralized in a decentralized situation.
It would be. It's definitely a problem which is cropped up in earlier forms of proof of stake, but a lot of these coins produce their own kind of take on staking, and it usually includes a protocol that actually spreads it around. Now, one of the reasons I like Atom is because it's a proven coin. It's been on for a while. Polkadot, it's very complex. Honestly, it's kind of mind-boggling. I look at it, and there's a whole new nomenclature which you have to learn and then understand the intricacies of. Atom, it doesn't seem like that, and I just like it because it's not as nasty, for lack of a better word.
I gotcha.
And because because you can actually find it in smaller bits, and it's not as well known, not as well owned as Polkadot is.
Okay.
Now I'll throw. Does anyone have any questions as to? I guess, anything regarding this, or did I completely lose you all?
No, you didn't. You didn't lose it all. You're actually quite adept at explaining what was going on.
Good.
Wow.
Yeah.
But very good. Thank you.
Thank you.
Where do we sit with time here?
I was just gonna say we are a little bit over time. So if anyone has any final sentiment, and then we will sign off.
Joseph, hit it.
Words of wisdom.
Give me your final sentiment.
I think in addition to the 3 primary coins, like we have the Cardano, the Polkadot, the XRP, which I hate anyway. You should definitely, if you're going to diversify out, look at alternative coins in the same space, perform the same function, because there's money to be made there as well.
Okay. And just to be clear, you wouldn't be buying the dip right now.
No, I would not be buying the dip. Not on Doge, no.
Awesome.
Oh, not on Doge.
I'm going to leave this out there as well. If you want to short cryptos, there's an ETF in Canada you can short now. So
awesome. There you go.
They're catering to everybody. We can bid against them.
All these gems we're giving all of our viewers, if they're still watching. Thank you so much for tuning in, and we will see you guys next week.
Awesome. Thanks very much,
everyone.
guys.
Bye, team.
Thank you very much.
Mm-hmm.